Thank you for being here today. Learn about the cost of credit and recent development in agriculture credit. Let us look at the flow of presentation. What is cost of credit? Cost of credit and recent development. Problems regarding agriculture credit in India. Solutions. Types of agriculture credit. Steps that have been taken to enhance institutional credit in agricultural and steps taken. What is cost of credit? The cost of credit is the additional amount over and above the amount borrowed that the borrower has to pay. It includes interest, arrangement fees, and any other charges. Some costs are mandatory, required by the lenders as an integral part of the credit agreement. Cost of credit and recent development. Credit supply is an important determinant of investment in agriculture. Since the nationalization of commercial banks in 1969, India has strongly pursued a policy of social and development banking in the rural areas. As a result, formal institutions of credit provision, mainly commercial banks, emerged as important source of finance to agriculture, displacing usurious moneylenders and landlords. Its importance. The policy of social and development banking was a supply lead policy. It aimed at augmenting the supply of credit to rural areas and that to at an affordable interest rate. Aspects. Three aspects of the post 1969 policy of social and development banking stand out. First, according to the new branch licensing policy, the commercial banks were required to open 4 branches in unbanked rural areas for every branch opened in metropolitan or port areas. As a result, if there were only 1443 rural branches of bank in 1969 and 35,134 in rural branches of banks by 1991. Secondly, according to the policy of priority sector lending, 40% of the net banking credit was to be compulsorily provided to those sectors of the economy that will not get timely and adequate credit in the absence of binding targets. These sectors were loans to farmer for agricultural and allied activities, micro and small enterprises, poor people for housing, students for education, other low income groups, and weaker sections. Thirdly, according to the differentiate interest rate scheme of 1974, loans were provided at concessional interest rate on advances made by public banks to selected low-income groups to engage in productive and gainful activities. The differentiate rate of interest was fixed uniformly at 4% per annum. Problems regarding agriculture credit in India. Insufficiency. In spite of the expansion of rural credit structure, the volume of rural credit in the country is still insufficient as compared to its growing requirement arising out of the increasing in prices of agriculture inputs. Inadequate amount of sanction. The amount of loan sanctioned to the farmers by the agencies is also very much inadequate for meeting their different aspects of agriculture operations. Considering the amount of loan sanctioned as inadequate and insignificant, the farmer often diverts such loan for unproductive purpose and thereby dilute the very purpose of such loans. Lesser attention of poor farmers. Rural credit agencies and its schemes have failed to meet the needs of the small and marginal farmers. Thus, lesser attention has been given on the credit needs of the needy farmers, whereas the comparatively well to do farmers are getting more attention from the credit agencies for their better credit worthiness. Inadequate institutional coverage. In India, the institutional credit arrangement continues to be inadequate as compared to its growing needs. The development of cooperatives credit institutions like Primary Agriculture Credit Society, land development banks, commercial banks, and regional rural banks have failed to cover the entire rural farmers of the country. Solutions. Cooperative credit societies should be organized to make it efficient and purposeful for delivering the best in terms of rural credit. Moreover, these societies may be transformed into a multi-purpose society with sufficient funding capacity. Middlemen existing between credit agencies and borrowers should be eliminated. Reserve Bank of India should arrange sufficient funds so that long-term loans can be advanced to the farmers. Types of agriculture credit. Apart from the money lenders, cooperative credit sources, and the government, nowadays the long term and short term credit needs of institutions are also being met by National Bank for Agriculture and Rural Development. Sources of agriculture credit can be broadly classified into institutional and non institutional sources. Non institutional sources include money lenders, traders, and commission agents, relatives, and landlords. But institutional sources include cooperative, commercial banks including the SBI Group, RBI, and NABARD. Steps that have been taken to enhance institutional credit in agriculture. Agriculture credit can be broadly grouped into institutional and non institutional based on the source of credit. Non institutional sources include relatives, money lenders, landlords, traders, and commission agents. Institutional sources include regional rural banks, NABARD, cooperatives, commercial banks, microfinance institutions, other non banking financial institutions, self help group. Institutional credit flow has increased in a big way since independence. Government has taken several measures to increase institutional credit flow and to bring more and more farmers including small and marginal farmers within the institutional credit fold. Steps taken. Priority sector lending PSL. All domestic scheduled commercial banks are mandated earmark 18% of their adjusted net bank credit ANBC for lending to agriculture sector. Also, within the 18% target, a sub-target of 8% for small and marginal farmers has been fixed. Under PSL guidelines, a distressed farmer can seek loan to repay the non-institutional lenders also. Interest Subvention Scheme ISS. Normally farm loans attract an interest rate of 9%. Under this scheme, short-term crop loans up to Rs 3 lakhs are extended to farmers at a subvent and subsidized interest rate of 7% per annum for a period up to 1 year. In case of prompt repayment, the farmers can avail a further prompt repayment incentive of 3% per annum, and thus effective rate of interest on such loans is only 4%. Interest subvention is provided to NABARD, regional rural banks, cooperative banks, public sector banks, and scheduled private sector banks for providing short-term credit to the farmers at subsidized rate of interest. Kisan Credit Card. The Kisan Credit Card KCC scheme was launched in 1998 with the aim of providing short-term formal credit to farmers. Honor cultivators as well as tenant farmers can avail loans to meet their agricultural needs under this scheme at attractive rates of interest. The government has also simplified the application process to increase interest among farmers. Repayment is also simplified and dependent on the harvesting season, reducing the farmer's burden. We hope you enjoyed it. Thank you very much for watching this video.